Stock markets in the United States continued their downward slide on Friday as investors reacted to President Donald Trump's sweeping reciprocal tariffs. The Dow Jones fell by 5.5%, the nasdaq dropped 5.8%, and the S&P 500 declined nearly 6%, marking the worst two-day stretch for U.S. markets since March 2020. The sell-off followed China's announcement of a 34% tariff on U.S. goods in retaliation to the U.S. tariffs rolled out earlier this week. Trump's policy imposes blanket 10% tariffs on most trade partners and higher levies up to 50% on over 60 countries. Despite the turbulence, Trump doubled down on his approach, touting job growth figures from March and calling on the Federal Reserve to cut interest rates. Federal Reserve Chair Jerome Powell, however, warned of potential inflation and rising unemployment as a result of the tariff regime and said it was too early for the Fed to adjust policy in response.
Difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth.
International criticism continues to mount, with the European Union and United Nations voicing concern over the global impact, particularly on poorer nations.